What's going on, everybody? This is Jordan with Conquer Trading and Investing. You're looking here at a chart of the S&P 500. We're about to go over our daily technical analysis, see how we're positioned, see how we can position, look at the markets, and see how we could best navigate them together. Now, as usual, we're going to start here. We're going to drop down and look at what happened during the New York session today. We're going to see coming into the New York session, we were all flat. New York took this up early this morning and shortly after the opening was pushing past the resistance here at 29.72. A lot of traders, what do? They chase that momentum. It's been a difficult market to trade. Our strategy keeps us away from chasing momentum, getting hurt. Sure enough, over here, as we broke the resistance to 29.72, we never got a retest of the broken resistance, flipping in as support to give us an entry long. We were looking for the long side. Didn't happen. Kept us out of the trade. More importantly, I want you to step back for a second. I want you to see where the range we've been in. Look at this range. Just step back over here. I'm going to make this now over here. You could see it. And going into the session, we have been in this tight range. We tried for 1, we tried for 2, we tried for 3 breakouts, 1 breakdown, and nothing, right? Now, because we're looking for high probability setups, we have been kept out of these false breaks, all of them, including this one because it was the wrong time of day to be trading. Where does that take us right now? Let's look at today's price action. I'm actually in a short right here at 29.47. Before I get into that and break that down for you and what I'm looking at, I want to just come over here and look at this chart. This is a chart of the Dow Industrials back then, and back then is referring to the Great Depression and now. And I want you to notice, right, the similarity between crashing down, right? Now, we crashed down faster and further during this current crisis than ever before. All right, but notice it took about 5 months. It took about 5-6 months for us to come in off the low during 1929 before we started rolling over and then testing the lows and then breaking the lows and then continuing to make lower lows. Now, just for some perspective, look where we are right now. Notice this. I want you to focus in on the red line over here. This was back then. I want you to notice that after the initial up and then price started kind of rolling over a little bit. And then there was like the last capitulation upwards, right? This was some buying frenzy, right? We're not into that stage right now. It looks more like we're like this over here. That's where it looks like. Are we getting ready for a bit of a down move over here? Perhaps. I don't know. I want you to take a look at it though. I want you to see and always be aware. If right now you're very bullish because the markets are really correlated with the monetary supply, being the expansion of the monetary supply, okay, good. That's the position you should be in right now. But I want you to be aware of the other side of your trade. Anytime I take a trade, I spend as much time or more researching the other end of my trade. I always want to know where I'm wrong. Now, something else I want to show you. Here's a chart of the NASDAQ 100. Now, it's pushing towards all-time highs, and sentiment is extremely optimistic. Look down over here. You could see this is the triple Qs. This is the optimism index 2-month average, and it's the highest since 2012. All right? Now, that sincerely doesn't bode well for tech stocks, which have been leading on the way up over here. Be careful. Right now, we know that retail is positioned and have been buying this whole dip. They're extremely positioned long. They're the ones who have been buying the market. Now, institutions we know are not positioned on the side of retail. Could retail be right this time? Could this time be different? It's possible. It's possible, but it's not probable. Let's look at what's happening over the charts right now. Again, I'm short here at 29.46. I'm going to break that down for you right now. Now, during New York, we did come up here and we did go ahead and look to break out above the 29.72 resistance. Some people are wondering if I'm paying any attention to the 200-day moving average, I believe coming in somewhere around 3,000. Now, I don't know where it is today. This was yesterday. Now, let me tell you, Let me be really clear. Trading is extraordinarily complex. The markets are complicated. The markets are one of the greatest edges I have is taking something so complex and simplifying it down as most as possible. I follow price, right? I have my biases, whether it's long or short, and no matter if my bias is bullish on the buy side or bearish on the sell side, I'll take trades both ways depending on what happens. Right now, my bias is bullish, right? And I just took a sell side trade. All right, you got to be able to go both ways. Now, I'm not following the 200-day moving average because I only follow price around the market structure of support and resistance with the help of trend lines. This is the most effective way that I ever found to trade. It is the easiest, most profitable. If you ever noticed, a lot of people pay attention to moving averages, the 200-day, the 50-day, sure. Do a lot of professionals not use those because everyone else is using them? Sure. Is it true that often when you get a break of a 200-day moving average, you get a spike through? Yeah. I don't use them. Now, more importantly, look what I have over here coming in right here at 30. Let me go to a higher time frame. I just want you to see. Up here around 3,025, I have a little bit of small resistance. I think that if we break above here, there's a higher probability that price tops out, not at the 200-day moving average, wherever it might be at that time, but at that resistance of 30.25 before pulling back. We'll see. Or maybe not. Maybe we have a top over here forming. We tried to break above this resistance. We've had a few attempts above it, right? Things are kind of heating up. If you're not paying attention to what's going on, things are heating up big time between the U.S. and China. And we've been talking about that now, covering that for about the last 10 days. And even today, they're going stronger. China's getting ready, it seems, to crack down on Hong Kong. Trump has responded. There will be a strong response from the United States if that were to happen. Baidu delisting itself from the NASDAQ. We are seeing an escalation of tensions between the United States and China, and that is going to continue to escalate. We're seeing good news, right? We're seeing this weekend, we're seeing almost all 50 states, I believe, open up a little bit, easing restrictions, right? We'll see how that goes, right? Any small business owners, let me know. What are your plans, right? It's a scary time. Consumer confidence really, really shooken by all this. Here we are though. This was my first indication, right? When we went into the session, I said to everyone on the live stream, I said, I'm not even looking for a trade. I am not looking for a trade this morning. All those that I know is that we've been in this really, really tight range, right? And this is what I see. I pointed this out to everyone. Now, I said, if we do break out to the upside, yeah, I will take a long. And then I put in this trend line over here, and I said, you know what? If we break below that trend line, that's my first indication that things are starting to get soft here. And then if we break below the support at 29.47, I'm going to be looking to sell. Okay? Now, let me set this up for you. I'm in the trade at 29.46, right? Why I got into the trade, again, first this break of the trend line was my indication that I wanted to get into it. But then it was the wrong time of day for me to enter. New York was going to lunch. I don't trade during lunchtime. Generally speaking, from anywhere between 11 and 11:30 a.m. Eastern time to 2:30 the earliest p.m. Eastern time. Now, the question came up today, where are all the traders in New York City going to lunch these days? Yeah, right. But nevertheless, the volume is the lowest at this time of day. No matter what instrument I'm trading, I stay away from low volume portions of the day. For equity markets, the best time to trade is the opening up until lunchtime, and then either from 2:30 or starting even at 3:15 p.m. up until the close. Now, after we broke down, again, wrong time of day to be trading, but we came back down over here. I was aware that Powell was speaking, but Powell had spoken Tuesday testifying. I didn't think he was going to introduce anything new, especially also after being on national television over the weekend, 60 Minutes. And then price came back down. I was away from my trading desk. I sent a note out to the Telegram group saying that, you know what, I'm not going to be here. I have a short order in at 29.46. And then it triggered, price came back up. It tested this trend line again as resistance. and is now bouncing off below it. It looks good. This is what really set up the trade for me. What really set up the trade for me was this fake out early into New York above the 29.72 resistance. The resistance at 29.72. And the reason why is because it's just the way the New York traders are. They like to fake out a lot of people, right? That's what happened. You had a lot of people thinking this is getting away from them, not doing what we do, waiting for a breakout. Most breakouts fail. Taking a breakout is a very low percentage trade, right? We wait for a breakout, we wait for a retrace to confirm the broken resistance as support, and then that's our entry. Didn't happen over here. Kept me out of a trade. I saw this breaking down. What targets am I looking for? You might wonder, right? So I'll tell you. Coming back down into this trend line, you could see we've looked at this the last few sessions. You could go back into the video from yesterday or the day before, and you could see over here this resistance was flipped to support. It broke over here this was after the close of New York actually, and then it was flipped back to support. Coming into this area, if we take this out to the downside, I'm just gonna go ahead and I'm gonna move my stop loss to break even. And then I'm gonna hold the trade overnight and see where it is tomorrow. Of course, I'm watching what happens down over here, the support at 288.80. Also the support at the light support at the whole number 2900, right? But those are the areas that I'll be watching how price reacts, right? I also see that I have this light local support coming in down at 28.80. All those areas of interest for me. I'll watch how price reacts over here if we get down here, right? I'll watch how price reacts, and if we start coming back up, I'll probably look to take profits, call that a nice trade. Of course, I'm pushing for the neckline and maybe even further, right? When I get myself into trades, on the S&P, I use intraday levels. So my risk to reward overall is excellent, but I'm looking to push for swing trades. I'll give what the market takes me. Listen, one of the most important things you could really rewire your brain in trading is that you need to not take profits as soon as you have them. You need to learn to push trades for as much as the market will give you. You're not gonna turn the corner to profitability if you're taking your gains too quickly, right? Take your stops quickly, push your winners. All right, we'll see what happens. I do notice that I'm seeing the dollar firming up. I'm seeing maybe a little bit of softness on the risk on we've been seeing. Let's see. I don't know obviously what's going to happen. Anytime I get into a trade, the next thing I do is move away from it. I don't like to watch the market. I will never move my stop loss after I enter a trade or exit before my stop loss is hit, before I take profit, or before I move my stop loss. All right, everyone. I hope you enjoyed this session. I enjoy every single session with you. I thank you all for the insight you offer in the comments. Obviously, it's clear. I read them and enjoy them all. I try to make that known. I do spend a significant amount of time. If it's worth your time to go ahead and watch this video and comment on it, it's absolutely worth my time to know what you're sharing. Everyone who's gone ahead and supported the channel by hitting that like button, God love you. I appreciate it. Have a beautiful day, everyone. I'll see you tomorrow morning.